Hi everybody, Dave here from KD Properties. Want to go over a whiteboard example with you today about some real rental budgets in Regina. So for this example, let's say we bought a house we're going to rent out for $250,000 and we put a 20% down payment on it, which is $50,000. If we do a 25-year mortgage at 4%, we're looking at a monthly mortgage payment of about $840. So what are the other expenses that come with owning a rental home? Well, we have property tax, which will be about $250. Insurance every month will be about $190. And if you don't have any rentals, you might think this number is a bit high, but it's not because insurance rates go way up for rental properties. This line here, repair and maintenance, the budget is $250 per month. And we'll talk about that a bit later, but a general rule of thumb is about 1% of the home value per year for repairs and maintenance budget. I have also budgeted for vacancy of $140 a month and property management of $100 a month. Add all of those together and our total monthly expenses are about $1,770 a month. Now in Regina, for $250,000, you can probably get about a 900 to 1,000 square foot bungalow. Perhaps it has a garage. If it does have a garage, it'll likely be a little bit dated and might need a little bit of work done. So what would the rental rate or the market rent be for that house in Regina? I'm going to say it's somewhere between $1,600 and $1,800 a month. So you can see right away, even if we're on the top end of that range, that's barely enough to cover our monthly expenses. So down here, this would make our cash flow $30 per month. Now, I'll get to this little bit in a moment. That's basically our total rate of return on our investment in this rental property. But as you can see, if you're only making $30 a month, people's first instinct is going to be to try to drive this number up, right? Because you want to get that cash flow every month, right? That's the whole benefit of rental properties. So what do people do? Well, the first thing they could do is manage it themselves, saving $100 a month. But I would pose a question to you, what is your time worth? You know, if you value your time at $25 an hour, are you spending 4 hours or less per month there? I guess depends on the shape of the property and how good the tenant is. If they have lots of requests and things like that, or if they just kind of mind their own business. So before you just delete this number, I would really consider how many hours you're going to be spending and what you want to pay yourself to do that essentially. The next thing is some people just won't consider vacancy. They'll maybe say, I can rent it out every month. I'm not going to include that. Or they might use a number lower than 8%. Why did I choose 8%? Well, on a single family house where there's only one person renting it, or even like an up-down duplex where you might have 2 renters, if the property is vacant for 1 month a year, that's 8.3%. So I think that's a pretty reasonable number to use. Depends how good you are at advertising and how good your tenant is, whether you can bring someone in there back to back. If your tenant leaves the place a little bit dirty and you need some cleanup or need to repaint, that's a couple weeks right there. So I would strongly suggest you include that in all your calculations as well. And then the final spot where people make this money up is repairs and maintenance. So it depends on the condition of the house and how the tenant is in there. Will determine how much you need to spend on this a month. But I would suggest to you to keep that in as a budget, because even if the tenant is good, over time you're going to need to do capital repairs. You know, a roof is $7,000 to get reshingled. If the furnace goes, that's $4,000 right there. If you need to redo flooring throughout the whole place and you're hiring it out, you're looking at $6,000, $7,000. So those are the big expenses that won't come in all the time, but over the years you need to account for. So if we use this number here as our actual expenses and our cash flow is $30 a month, well, that doesn't seem very good, does it? I would suggest it should be a little bit more than that. We like to have at least $100 to $150 per month cash flow on all our rental units. But even if not, let's look at what the return would be on the initial $50,000 that you put in here. There's a few ways to make money on real estate. The first is cash flow. That is the cash coming into your pocket every month after all your expenses are paid. The next is principal pay down. So on this mortgage here, you get about $325 of principal pay down every month. And then finally, over long periods of time, your house will go up in value. And I used a conservative value of 1% for the Regina rental market for $208 a month. So if you add those all up, you get $561 a month, or $6,732 per year. Now your initial investment will be your down payment plus some closing costs. So for this example, I used $55,000. So if you make $6,732 per year on a $55,000 investment, that makes your return on investment 12.2% per year. So that's still a pretty good rate of return, especially when you look at like stock markets and things like that. The key thing here is to know that the principal pay down and appreciation don't get realized till you sell the house or refinance it down the road. So if you are only making 30 bucks a month in the meantime, you better have a little bit of buffer in case you have some unexpected expenses that come up. And just one final note on the R&M. You know, we've seen quite a bit, maybe landlords will not do this repair and maintenance, right? So the house kind of gets worn down over time. If you don't keep your house in the same or better condition, you're never getting this appreciation, right? If you don't do any maintenance on this place for 10 years and it gets way worn down, it's not going to be worth $250. It might only be worth $200,000. So again, why it's important to include all these numbers, R&M, vacancy, and property management in your initial calculations when you're figuring out your expenses for a rental property.